Okay, so a very warm Dubai welcome to the panel. Thank you very much. So as mentioned, my name's Dawn and I'll be hosting the panel discussion this afternoon. So firstly, I'd like to kick off. Do we have another microphone? And just so I get it right this time, we have Nijay, then we have Roberto, Daire. Okay, I'm not too far from Ireland, so I can get it. And then we've got Mohamed on the end here. Okay, so my first question for the panel is the profit proportional to the risk leverage? And what kind of risk rules makes a disciplined trader? We'll start with you, Nijay.
See, what I believe, whenever we are trading, right now trading is, whatever trade decisions we make. Now, our decisions are based on either technical analysis or fundamental, right? Now, if we see technical analysis, if our decisions are based on technical analysis, then in that case, what we are doing is, whatever has happened in the history, right? How much time I have, basically, I don't know.
You can have at least another minute.
1 minute?
Well, you can go for a minute or two.
Okay, then I will make it shorter. My answer will be short.
No, feel free to share, though. We're waking everybody up after lunch as well, so it's fine.
Okay, so now, as I told you that since our decision of trading is based on what has happened, already happened, right? And if we see, if on that basis, we predict what will happen in the future, right? So what happens, that future always gives us surprises in this market. Now, if you see last 1 or 2 years, or maybe more than that, the market, if you see, has moved in uncertain manners. Those pairs or those instruments which have never moved more than 50, 60 pips in a day, they have moved 500 pips in a day, right? So if we are talking about what type of risk, what type of leverage, right, then as my opinion, as per my suggestion, it will always depend on what the market, right, is. What the market is, I would say it is very relative, right, with what type of instruments we are trading, right? If the instruments are volatile, more volatile, then we have to take more risk. If it is less volatile, less risk.
Perfect, summed up very nicely. Thank you very much. So over to you, Roberto.
So I would look at the risk-reward ratio of our trading activity. I am a trader, always been a trader. I come asset management before joining brokerage. And all my trading is risk-based. Of course, leverage, it is absolutely linked to the risk profile of our trade.
Yes.
But I would look at it in a very holistic approach to risk. Risk is actually an opportunity as well if you manage it properly. Over-leveraging your trading could be excessive risk. The appropriate amount of leverage into a very strict and meaningful risk framework is an opportunity. Actually, I used to say that no matter what kind of strategy you're using, the appropriate use of leverage, so the position sizing part of the risk management, is what will make you a successful trader, because it will make your trading adapt to your assets and to your own attitude, tolerance, and risk profile. Actually how you approach risk. And this is what makes you a successful trader.
Very interesting. Thank you very much. Daire, your opinion.
Summed up very nicely. I think as traders look at it, and we've seen the changes that have come across, globally in leverage. We've seen what happened in ESMA. We've seen Australia are going to soon do something similar. The regulators are, I suppose, imposing leverage restrictions on traders, and that's to protect traders. Brokers want traders to be protected because the longer they can continue to trade, the longer they will continue, to be a client and extend their lifetime, with a broker, and that's fundamental to it. So it does come down to your individual, risk-reward strategy. High risk, high reward. We all know that. It's nothing, coming out of the blue. If you want to look for opportunities, you can look for opportunities using higher leverage. But ultimately, the decision has to come down to you. You know, regulators can do so much to, I suppose, inhibit, if that's the right word, taking high-risk strategies. But at the same time, traders are speculators, are gamblers, and sometimes they do like to take high risks because you can profit very, very quickly, you know, in a very, very short amount of time. But it has to be balanced with, you know, a proper risk management. I think Roberto kind of summed that up nicely, that you need to know what you want to get out of it, and at the same time, equally be cognizant of what is the potential downfall on the other side of it.
Very true. Thank you very much. And Mohamed.
Thank you all for having me today. Yeah, so I'll say, as we all know, no risk, no reward. This is all known. Using a high leverage is high risk, but life is risk in itself. So high leverage can be against you or can be with you. You can make high profits or you can lose a lot. But if you use the right strategy and right risk management tools, you'll be able to succeed and make profits. You only just need to trade slowly. Yes, we do provide high leverage. You don't have to use all the leverage in order to become profitable. You can use some of these leverage because the reason we provide you a leverage in order for you to be able to enter to the market. Otherwise, you'll need a big capital for everyone to be able to trade with us. Thank you.
Lovely, thank you. If we can pass the microphone back down. And the next question I have for you now is, can you please give us your top 3 do's and don'ts to make a profitable trader?
I will tell, but nobody follows. So the top three do's are, before you trade, before you take a trading call, you should know where your stop loss point has to be, right? So first thing is, like, how much stop loss level, what stop loss level you want to exit the trade, right? The exit level of the trade, whether you are positive or negative, both sides. Second is, the second do you should follow is, you should know what percentage of risk on your capital you should take. It's not only the stop loss level. Now let's say you have $10,000 in your account, or you have $100,000 in your account. You should know what is a percentage. For example, 1% of the risk of your account. For example, if the account is of $10,000, if you want to lose 1% of that is $100. 2% of that is $200, let's say, right? So how many dollars or what percentage you want to lose from your equity, right? So that you should always follow, right? Because then you have enough equity left. If you put the whole of your equity in a single trade and if the trade goes wrong, there's no point, right? So then you should know before taking a trade, first is the risk point, where you will exit, and the level where you're exiting, how much percentage of your equity you want to lose at that level, right? And third is, what you should do is when you, actually I'm not prepared for the third point.
That's okay. But that's your do's,
So
what about don'ts?
for me, these 2 points are very important.
That's
for
fine.
do's. So it's enough if you follow these 2 points for your do's.
Yeah.
Right? And for your don'ts, don't trade without a stop loss. It's a very simple thing. As I told you, nobody follows here. Nobody. I think I have seen 90% of the traders, they don't put a stop loss, because when I ask them why there is no stop loss in your trade, they said whenever I put a stop loss, the market returns from there. So the first don't is never trade without a stop loss, right? And that's what I want to tell about the trade.
Lovely. Thank you very much, Nijay. Roberto, your opinion on this one?
Yes, again, I would link the top 3 do's again to the way you approach risk. The first thing to do is to think about trading as something that you have to plan. You have to look at it as a business. No matter if you do it full-time, and many people have succeeded doing that, or just part-time, look at it as a business, as your side hustle, as they say in the US.
Yep.
So plan it and understand that you have to take some risk, actually measure them and use them to your profit in time. This is the first thing to do. The second thing to do, in order to do the first one,
Okay.
is actually getting the right tools, the right education. You have to educate yourself. This is why us as a brokerage, we are so focused on delivering such a kind of education from people that actually trade and continue to trade. I am still a trader. I still, advise my own startup hedge fund, and our chief analyst, which is sitting here, is actually an active trader. So this is another thing. Get your education and maybe find your mentor, because if you face uncertainty, which is the market, without that tool, you might, for sure actually, find difficulties. Okay? The third thing to do, yes, it can be more practical. Apply those rules that you plan. So one of those could be set the stop loss. This is not just setting it in percentage, because it depends on the kind of instrument you use, and that's where the education will tell you how to do that. You have to understand how to size your position in terms of volatility of the single instrument. Actually, setting the same stop loss for each instrument is wrong.
Yeah.
You actually have to understand how much is the stop loss, and then calculate the position side in order to be within the rule of the percentage that you set.
Lovely.
Don't get overexcited and don't get too frustrated. The first one is when, especially novice traders, the worst thing that can happen is a winning streak. They will think they can beat the market. You are a business again. Your market is where you operate in. You are not there to beat it or to show the market that you're smart. You need to make money out of it. Second thing, control your emotions. The emotional part of investing and trading has been mentioned many times, fear, greed, and etc. But there is so much more behind it. There is the part which is actually linked to behavioral science, so the biases of our mind, which in trading are amplified by the fact that you are facing uncertainty. We are tricked every step of the way from our mind. And if we don't know that this happens, then we don't know how to react.
Very true.
Last thing is what I could actually say to all traders. This is an exciting word, but be serious in approaching it. It's not a game. It's not for sure gambling. Actually, one of the biases is the gambler fallacy. The approach as a gambler. That's one of the biases which is driven from our biases, but that would take really a long time to explain. So I would pass the mic to my colleague here.
Lovely. Thank you. Very insightful. So Daire.
Cheers, thank you for that. I think the further down we go down the line,
It's going to get more difficult as you go down the line.
We run out of do's and don'ts left. Exactly, yeah. I think, like, to follow on again, and I think your point was very valid. Do remember that you're human. I think that is unbelievably key, and you see it in no matter you're a professional trader, a retail trader, a novice trader. We're emotional, we're impulsive, and you do see it when clients trade. Because as soon as a trade turns profitable, the first thing you want to do is seek to close it. Click it out, and you do see, as a broker, you see so many clients who close so many small trades with a small bit of profit. And when you, on the flip side, is you let your losses run. And I think your very first point, Nijay, when you were talking about stop losses, it's the same type of thing. When you go in to do a trade, if you go to buy a car, you don't run out and go to the first one and you pick the first one you see. You do your research, you prepare, you check around to see what you're going to do. You have a strategy in mind. You know how much money you're going to invest. You know what you want to pay, and you know what you want to get for it. When you go to trade, it's the exact same process. You have to prepare. You have to do your research. You have to be educated and understand the market. There's no such thing as easy money, and you can't. The biggest hedge funds in the world, they make, if they make 20% in a year, it's the best year ever. And people go out and they think, I can make 10%, 20%, 100% in a week. And that means I'm going to make 1,000% in a month. This is the one thing that, you have to be cognizant of. And as Roberto said, it's a business. You have to think it like a business. If you can make a 10% return in a year, over a whole year, then you're doing something very, very right. So there's lots of kind of do's and don'ts, in that. And I think, You have to be practical. You have to, think about what you're doing. One thing I would say is you don't like to give advice, and you don't like to, to pick. Everybody has their own strategy, and that's the one thing. You do need to have your own style. You need to have your own strategy. Again, there's a different stop loss for every instrument. I think that's so right. There's a different target for every instrument. Whether you trade FX or crude oil or indices, every single trade is different. And the reason to initiate that trade for every single instrument is different for me, it's different for you, it's different for you. Nobody else is responsible for your activities. And when you click to trade, you are now responsible. You can't turn around and say, the broker did this, or someone gave me advice and did that. You are ultimately responsible when you open the trade, you're ultimately responsible when you close the trade. And that has to be the number one key in your mind at all times. The only one thing I would say is add to a winning trade and never add to a losing trade. That's just my own personal, how I would trade. So.
Lovely, thank you. I'm hearing it's a lot to do with mindset and emotions at the moment. Yeah, lovely. So what would you like to add to that, Mohamed?
So I believe they said everything, so I'll summarize it for you guys. So do keep your emotions aside, which is rule number 1. Secondly, you should apply stop loss and take profit, and do have the right risk tools and the knowledge in order to enter the market. This is in the do's. If you go to the don't trade on news, because news is just history, so it's just repetitive. A lot of traders use on this because the market become very volatile. Do not risk your whole capital. Know how much you can risk of your capital in order to be able to be protected. And always use a hedging strategy in order to be protected. And finally, I will say, do not let a winning trade goes into a loser one, which is a lot of people do that. So you can have a profit in your trade, don't let it go against you. You can apply the right tools for it to put stop loss where you entered, because this is a market, you can lose, you can win.
Lovely, thank you very much. If we can hand it back down. Okay, so the next question we have for the panel is, how do you build a profitable Forex trading strategy, and what are the technical and fundamental analyses that need to be accounted for?
Now this question, whenever we meet a new trader or an old trader, whoever it is, he always asks this question to us. What is a strategy which can give us profit? So then when I tell him, open an account, start trading, lose money. Then someday you will have a strategy where you can make a profit. But jokes apart, see, profitable trading strategy, and along with that, technical and fundamental to account for. See, what I believe is that, see, is my belief, maybe all may not agree, but whatever technical or fundamental analysis you do, however perfect it is, right? There is always a probability you can go wrong, right? Now that probability will differ from trader to trader. How expert he is, how experienced he is. Somebody, if you are a new trader, the probability is 50%. If you are experienced, it will be 60, 70, 80, 90, but there is always a probability in every trade before you enter that the trade will go against you, right? So let's say, in a realistic way, if we say that the probability is 50% you lose money. So your risk management system has to be such that even if you lose 50% of the trade, you should be in profit.
Very
so
interesting.
that only your risk management system can save you, where nobody focuses. I have seen, in my career, I have seen around maybe more than 20,000 traders, right? Small to big. But whenever they enter the trade, though they have a stop loss point, they have a take profit point, right? Some have, some don't have, but they never follow. They never follow a standard risk management procedure, right? And they never follow a trade plan, right? So my suggestion is, if you see the probability of your trade, of your winning trades, design your RMS as per that probability, and then you will make money. Thank you.
Lovely, thank you very much, Nijay. Roberto.
Well, setting up trading strategy, you have so many approaches. It has been said that each and every one of us has his own rules and etc. It has been mentioned before that you have to set a target on top of the stop loss. I don't use targets. I used to follow and let, profitable trades go. The thing is that you can use all set of rules as long as the risk is under control. Of course, you have to start from somewhere, which is my strategy. And then there is always this, let's call it fight between fundamentalists and technical analysts. And both have their pros and cons. Because, being a fundamental trader, looking at news or economics in order to understand, I don't know, the trend that could be, that could affect in the future a certain currency or a certain commodity, it's a way to approach it. It takes a lot of research, and it's absolutely, viable as long as you do your own work. The technical analysis is sometimes looked at as a shortcut, but it's not. Actually, it is true that, the price that you see is the result of the action of traders, but how you analyze it is not just, a game, just putting 25 or 30 indicators on that, and I'm sure that many of you here are actually recognizing yourself in this, just to find a way to do enter into it. The thing is that technical analysis can be approached in a very simple way, and looking at how the price moves. We are a fan of price action, for example, so that you can really extract some real sense from the market, especially if you don't go too low on time frames. I am of a different opinion, a third opinion. You actually can merge the two. Fundamental analysis can help you to understand, first of all, to avoid threats. Trading the news is extremely difficult, and in that case, if you really want to do it, you have to change completely your risk approach, because you face market inefficiencies. All operators during news will reduce their risk, so the liquidity will get thinner. It means that you will need a lot more larger stops to operate. The other way is to understand where are we going in the mid to long term, giving you the direction, and then use the technical analysis to pinpoint your entry. So that would be a very healthy way to do things, and this is actually how I trade manually. When I trade manually, I use both. Both have pros and cons, but together I think they will actually help you to be more proficient. And on top, again, mantra, an adequate risk management framework, apply it always. No excuses, no kind of, yes, but maybe it could reverse. And then you're dead. You don't do that. Okay, thank you.
Lovely, thank you.
You couldn't have just kept number 3 to yourself, no. So look, I will, we'll follow on a little bit. I think you have to decide, first of all, what type of trader you are. Are you a scalper? Are you a day trader? Are you a long-term trader? Because depending on which type you are can also help establish what type of analysis you want to use. I think, Roberto, you said a mixture of the two. I think that is the right way to approach it, because if you look at one on its own, it means that you're factoring out so much, market information. If you look at only economic news that's coming out, then you're ignoring all the technical indicators. And ultimately, knowledge is power. You don't have to be the smartest person in the world to be a good trader. The best traders are the people who arm themselves with as much information from every source they can get it. That means, scrounging websites, news reporters, watching news, learning technical analysis, learning, education. And, so many brokers out there are offering education because, they know education is key to success of traders and the longevity, of our client base. So I think you have to try and find the right balance of the two. If you're a day trader, if you're somebody who's, trading on, technical scenarios, quite often when you see at news time, you may close your positions because you don't want to allow that affect the market. You don't want to allow that to go into it, because if something happens and the Fed cuts by 1% or something and the whole market changes, your whole technical setup has suddenly become redundant. And then you must reset re-strategize, replan. And I think that's again, it's key because the market is changing. You have to be able to evolve and change. You do need to prepare for a trade, but you need to be adaptable and you need to be able to flex your trade and you need to change your stop loss or your take profit. You can't go in with necessarily a definitive target in mind because something can affect it and something can manipulate the market in a way that you need to now reset. But at the same time, you have to be cognizant that when you do prepare a trade, that you know what you want to get out of it. And you can't be impulsive or be panicky, I suppose, if the word may be, that if something doesn't change and if something goes slightly against you, suddenly then you're closing everything out and you're incurring losses that you didn't want to do. And the worst thing that happens is 10 minutes later or an hour later, what you wanted to happen suddenly does happen. And then you realize, you know what, once again, I closed the trade out and I knew exactly what I wanted to do. And then what happens is, the next trade you do, you're going to double up because I knew I was going to get that right. Now I'm going to double up because I can make the money that I should have made on the other trade. And then suddenly you're in a what's it called, a rigmarole or an avalanche. And then suddenly you're making trades that you haven't planned and you haven't prepared for. And that's the one thing you want to be away from.
Lovely, thank you very much. Mohamed.
Yeah, so I'll go first with the famous quote, before you attack, you must defend. This is what every football coach will tell you in the field. So before you enter the financial market, you will do exactly the same. So you need the right strategy in order to enter. So strategies could be, every trader have his opinion. So you can be a long-term trader, a short-term trader, or a hedger or arbitrager. So if you would like to trade on a short term, you can apply the fundamental analysis as this news comes out every single day. So you can be a short-term trader. If you're planning on a long-term trading, you can go with the technical analysis. Usually, sometimes there's some wicks happens, but it usually works out. Thank you.
Lovely, thank you very much. So some very good advice coming through here. So fourth question, there is a very famous Warren Buffett quote, which says, rule number 1, never lose money. Rule number 2, never forget rule number 1. So what advice do you have for traders to stay away from losses?
If the traders take that advice, then I can give, because even if we advise, they don't take it. So if a trader wants to stay away from losses, then as I said earlier, I will add to that point, I said earlier that trade is always, if you see mathematically, it's a probability. I will again repeat that point, I'll add to that point, it's a probability. So if you want to stay away from losses, as I told you, that you have to trade or you have to devise your strategy in a manner that even if you are 50% wrong, right? Whenever you trade, right? If the trade goes in your direction or if the trade doesn't go in your direction, right? Either one trade will go in your direction, the other will not go in your direction, right? So even if you are 50% wrong, right? You have to be in profit, and that only your risk management system can save you. So now if you want to avoid losses, right? You have to come out of the trade early. Or you have to reduce your losses from the trade that goes against you, or you have to fix your losses. For example, if I'm putting a trade, right, as I told you, I should know how much percentage of my equity is at risk. If I say, let's say 1%, for example, if I say I want to put 1% of my equity at risk, right? So if I'm wrong in that trade, what I will lose is 1%, right? Now there is something called as trailing stop loss, right? If I'm right, I should use it. So let's say if I'm wrong 50% of the time, the other 50% will cover my losses. So I lose in 5 trades, I may lose 5%. In the 6th trade, I may get 6%. So still I'm in a profit. Thank you.
Very interesting, thank you. And I might rephrase that then as to how would you educate people rather than advise them on how to avoid losses?
So, educating people is, again, as I said, one of the major factors that can make them successful. Get information from the right people. Well, Warren Buffett is a legendary investor.
Exactly.
When you look at those two rules, those apply to what we call the value attitude to investment. He's a value investor. So he looks for value, invest, because he looks that the specific stock, he's a stock trader mainly, has some value that the market has not recognized. Or like during the big financial crisis with his legendary trade on Bank of America, he just did a value assessment. He said, okay, Bank of America cannot be here, cannot fail. I come in with, I don't know, 5B, I think, with a very nice arrangement so he cannot lose the money.
Yeah.
And he made filthy amount of margin of that. But that's value investment. He's a legend. So this Mr. Nobody will say that when it comes to trading, those two rules are completely wrong. Never lose would make you lose all your money in trading. What you really have to master is how to manage losses. Losses are part of the game. Never lose will let you leave your position open forever. Will contradict everything we are saying until now. Stop losses will not be there because you cannot lose. Actually, trading is everything about managing losses. There's been, a sport relationship made before. If I could say, it's like tennis. A tennis player might win, I don't know, a good one, 5 tournaments in a year, but he plays 30 of them. So in order to win those 5, he will have to lose a semifinal, a quarterfinal, and still go on. If I can make this, tennis is what I did. So it really, to me, really, gets to the point. You have to know how to master losses. If you don't do that, and you don't want to do that, go to the beach.
Very interesting. Thank you very much. Dara.
Very good, yeah. Yeah, no, I think it's the first rule of Fight Club. Nobody talks about Fight Club. Yeah. No, it's a little bit like this. Nobody wants to talk about losses, but you have to talk about losses. Losses are real. Losses hurt. Losses you remember. It's you remember. It's easy to remember the ones that you make profit from, but you try to forget about their losses, and they usually are bigger than your profits. Especially when you're starting out. And I think again that's something that people really have to think about, because they do hurt. A little bit like Warren Buffett, we're trying to build a product to protect clients, and we're just about to launch it, and conveniently enough it's called Ava Protect, and essentially it's an option built into the back of an FX trade. So it's exactly, yeah. So we built a tool where you do have an FX trade, you click on our Ava Protect button, and if you
open an account with you.
You can, please do, and if anybody's there, it's on our mobile, and essentially you pay a premium, or a 1-day, 2-day, 3-day premium. If your trade goes the opposite way, it's almost like it's better than a guaranteed stop loss. So we'll refund your money back in your account. We've kind of built it purely to let people understand what losses are, and we're not designing it for people to trade into the future, but at least you learn without just getting hurt as much as you normally do. And people who blow their account up in a week or in a day, we don't like to see that. Because there's no value for a broker, there's no value for the client, because you come in and next thing you're gone. And again, it comes back to education. We've talked about so much about education. We've talked about so much, about how you need to strategize. These are the things that you need to really do in order to be able to produce winning trades. And I think your example of a tennis game, I think, was perfect, because it's a long season. There's no, you need to be disciplined. You need to go in and lose those tournaments and able to come back stronger and stronger every time. And eventually then you learn from your mistakes and you become a winning trader. And that's when you start to reap the rewards of your trading in the long term.
Lovely. Thank you very much, Dara. And Mohamed.
Yes. Well, losses is part of the game, as everyone said. There is some calculated loss. What we need to do is try to minimize our loss. You can minimize our loss, but sometimes there's uncertainty that happen that you cannot protect yourself from, which is like uncalculated beta, which happens, uncertainty as the geopolitics that happens. I give example of the past 2 weeks. The oil jumped from 54 to 63. Nobody could have protected or predicted this move. So what we try to do is minimize our loss. Maybe you can use the right tools, not to have many orders in the market before the weekend. And I would say this is the most advice for me. Apply technical analysis using the right risk tools and fundamental analysis altogether. And also calculate that some things could happen that it's out of the market and it can affect you and make you lose big. So you just try to minimize the losses. Thank you.
Lovely, thank you very much. I think my takeaway from that is that losses are inevitable, but educate yourself to minimize them. Lovely, thank you very much, if you can. Okay, so final question, and just to summarize, is your takeaway from each person as to what, in your view, people can do to be more profitable in Forex trading?
See, Forex trading, I would say, is a mind game. So first thing, whatever decisions you take, whether to which instruments to trade, where to enter, where to exit, all these decisions you take from your mind. So first of all, you should do some mind exercise. You have to, so before you trade, right, you should be relaxed, right? So if, so you have a fight with your wife or your son or your daughter or your friend, and then you start trading.
Good advice.
You lose money, right? So to take any right decision, because this decision which you are taking is straight away you lose your money, straight away. So whenever you take this decision, other decisions can be reversed. Money can't be reversed. Because to earn money, you should have money. Right? So money can only earn money. So whenever you trade, the first thing you should do is you should first exercise your mind. So then and then there are a lot of things you can do with your mind. You have to meditate or whatever it is. The first thing is you should be relaxed before you start trading. Right? Second thing is, whenever you take a trading decision, you should not be influenced. You should not be influenced by any trader or any call. You should not be influenced. You should see that if you are going to trade a particular instrument, that there should be no news for next 1 hour or before 1 hour. See, if you are not a news trader, usually what happens in the news, most of the traders, they lose money in news, right? So those traders who are new, or those traders who are maybe a mediocre trader, they should always see to it that they avoid news trading. Because most of the time, they are the ones who lose a lot of money during news, because the movement is huge. So they should avoid trading when a big news or important news are going to come. So my suggestion for if you want to be a profitable trader, right, is first thing, obviously your mind should be clear, you should be relaxed so that your decisions are good. Second is, as I told you earlier, that whenever you trade, right, let's say if whatever trade you put, and you know that I am going to lose only this much money per trade, right? Let's say 1% or 2% of your equity, put the trade, forget it. Don't see the trade again. Never see the trade. Either you, if you are happy with doing only one trade, stand up and go. Forget the trade. Let the trade exit itself. Otherwise, most of the traders, what they do, when they are losing money, they'll stay. They will stay like till infinity. And when they are making money, they'll come out fast. Oh, I'm making this $10, come out. And if I'm losing $100 also, I'm still there in a trade, just waiting to make $10. Right? So my suggestion for a profitable trade is that whenever you enter a trade, right, you should know how much equity you will lose, right? Let's say if you are losing, let's say 1% of your equity, that you will have 100 trades, right, to lose the whole of your equity, and still you can't make money. You should stop trading.
Good insight.
Thank you.
Thank you very much, Roberto.
My colleague here has been very technical. I would go a step back. A profitable trader is made by his attitude and his knowledge and his consistency and his resilience. So, 3 things. First of all, be humble. None of us, I have been trading 30 years, not even Warren Buffett there, can beat the market. Profitable traders look at the market as their battlefield. They actually use the market as a tool. You cannot beat it, you cannot be smarter than the market. So be humble. Don't think that ever, even when things are going very well, that you mastered it. In Wall Street, they say your worst drawdown is yet to come. So always think that you cannot beat the market. Use it for your own benefit. Try to learn from those that actually do the job. This is true in everything in life, but in trading is even more important. There is so much educational courses around, especially those that will tell you you will become the best trader in the world, you will buy your boat tomorrow. Don't waste time, don't waste money, don't waste your well-being. And believe me, many has lost their well-being by following a dream that doesn't exist. So find your mentor, find the people that trade. You have an occasion here, if I may. Tomorrow we'll have our chief analyst here. He's a trader. He will just show how he trades. He trades his live accounts and how he does it. You will see that you cannot buy a boat tomorrow, but in 2 years, if you are following such attitude, you can be quite happy. So again, educate yourself and be straight, humble, consistent. Resilience, a streak of losses, if you are applying the right strategy in terms of risk management, is not a problem. Don't get beaten up, don't get it personally, don't think that you are not worth it. Because this happens. Even at very experienced traders have been, they experience breakdowns because of the lack of resilience. So, streak of losses are fine as long as you apply a strict risk management, and compounding is there to help you to come back. Thank you.
Lovely, thank you very much. Daire, your takeaway.
Yeah, I'm just going to finish off with one more kind of sporting analogy. I'm going to refer to Roy Keane. If anybody in the room who knows who Roy Keane is, he's a very famous Irish soccer player for Man United. He was a captain. And one of his key strengths, I think, was discipline and an unresounding, focus. And that is exactly, it's that type of mentality which is why he was so successful. Every single time he went out to play a football match, if he won the football match, the next football match was reset to 0. Didn't matter whether you won the previous game, whether you lost the previous game. The next game was a brand new game and it was 0-0. And his objective was to go out and win that game, and 1-0 was the same as 10-0. When you apply that same methodology to trading, every single trade is brand new. Whether you lost the trade before or whether you won the trade before, you cannot sit and think and go, okay, if I win 6 out of 10, that's great. If I win 4 out of 10, it's not so bad. Every single trade is brand new. Money is real. You have to be disciplined and focused, because if at any time you let that slip, that's when you're going to let your guard down, and suddenly the trades that you focused on that you're going to make that are profitable will suddenly flip. And I think if you apply that kind of mentality to whatever you do in trading, you will be successful. And the only other thing is, on the other side, is enjoy it. Trading is fun. There's excitement in it. I know I said earlier on the very start, we're emotional and we should be emotional, but at the same time, it is a little bit of fun. So do something you love as well, which is always a good thing.
Lovely, thank you very much. And Mohamed?
Yes, I'm sure everybody have to taste the loss before they become profitable. This is the true fact. So I would say, first we need to keep our emotion aside. Also, as they said, you have to be disciplined. Nowadays, central bank have been more transparency. I believe first you need to choose what pair you would like to trade, whether you would like to trade FX, whether you would like to trade commodities, US equities. It depends what you would like to trade. So first you need to decide. Then you start to educate yourself about whether this pair or this commodity. Read news every single day. Follow central bank is very important. And the new thing that's coming out, you also need to follow what Trump has been doing, because it's been affecting the market very tough. I'm sure everybody, all the traders here knows. Now they have created an indicator for him. So I will just summarize it. Follow central bank. This can make you become successful. Not only to just follow them, know what's their plan, whether they're planning to raise interest rate, cut interest rate. It's a little bit more technical. Sometimes they go, what's their plan in the future? Inflation is high, inflation is low. So you need to understand all of these things. So you really need to educate yourself. It's not as easy to become profitable. It takes a lot of hard work, but every broker can help you to become. Thank you so much.
Thank you very much. Well, that was a very educational and informative panel session today. Can we please have a round of applause for our panelists? Thank you.